Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at, as per the title of the video, a particular pattern that's repeating now for the fourth time in Bitcoin's history. And the question is, will it lead to the same outcome, the same results in the past three times? So we'll be examining that pattern and seeing whether history is about to repeat. We'll also be running down on the Bitcoin timeframes and having a look at the 60-day cycle, as well as having a look at the wider markets as well. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So what is this pattern that I'm talking about? And if I go onto the weekly time frame first of all, and we draw this line here from the tops of these peaks and take it across, if I remove this particular line at the moment, what we have here on the larger term time frame, going back all the way to April 2021, when we had these two peaks at 64 and 69,000, which led to the end of the previous bull market. What this did was to form a left shoulder. And then in the bear market, we had the head of the head and shoulders pattern. And now recently, we've now got the right shoulder based on these points here. So what you've really now got is an inverse head and shoulders pattern developing. And the classic way these normally end up is that once you break out, there is a high probability that it comes back and retests the previous trend line here as a support, as this line was a resistance here and here at this point, and now it's coming back to find that resistance as a support before we have the big blow off top. So this is giving us a very strong clue that with a high probability, remember there are no guarantees with these things, but in the time band that we're in, at the end of the bull phase of the 4-year cycle, you would expect a big blow off top, and this seems to be confirming that at the moment. And the question a lot of people will always be asking is, how far can this go now that we've broken above this trend line? And the measure that normally most people use, and I know many people use different measures, I can only share with you the measure that I use, and that is if you take it from the bottom of the head here to the neckline, that gives you around about a 352% move to the upside from the break of that trend line. And if that was to happen, then there's no guarantee of that. Nobody can say for sure, nobody has a crystal ball, and all we can do is use these patterns to extrapolate possible outcomes. And the possible outcome of that 350% move would take it to, according to that measure, would be about 350,000. Now, the way the price has been moving over the last 2 or 3 years would not suggest that that is a high probability play. But as we know with Bitcoin, anything and everything is possible. And we have our target that we've been looking at anywhere between 150,000 to 500,000. So this is still within that range. And obviously the higher you go in that range, the less probable it becomes. So please remember, I'm only just sharing with you what the pattern is telling us. I really don't like making any predictions. I'm not here to tell you that it's definitely going to happen. For all we know, it could be much higher than that, or it could be much lower than that. But if we look through history, it's telling us something quite interesting about how the previous cycles have played out with this pattern, which is now repeating for the 4th time. And for that, if we have a look at the previous cycle between 2017 to 2021, and the neckline there was around about the $10,500 mark. So what you got here was a left shoulder, a head, and an extended right shoulder. And if we do the measure here, you'll see how this pattern repeated. So if we do the same measure here, from the bottom of the head to the neckline, you can take that neckline to whatever level you want, but I'm just taking it to an arbitrary level here, around about 250%. So when we broke out, as you can see, it broke out, came back, retested it, just like exactly what it's doing now. 250% would have taken us to 37,600. And yet we went all the way up to 69,000. So this pattern actually played greater than the measure would have suggested. That doesn't mean that the current pattern is going to play just like that, because we really don't know what Bitcoin is wanting to do. And if we go back to the previous cycle, back in 2015, a similar thing happened one more time. We'd already topped out at the end of 2013, and then we created this neckline one more time. So you see here, you've got the left shoulder, you've got an extended head, and then you've got the right shoulder. And then when we broke out, we went up, came back and found resistance one more time to retest that trend line over here. And if you look at the measure from the bottom of the head to the neckline, that was around 200%. And if we do the 200% measure from the neckline, that would have taken us to around about 1,467. And look where it ended up, all the way up to 20,000. So this pattern played out greater than the measure that you would have normally expected. So that's 2 times this pattern has played out. And even if you go back to the first cycle, where the price action wasn't really very well developed, but a similar pattern occurred one more time. And that was at this point, and you can see the same pattern occurring one more time. So here, the left shoulder wasn't as prominent, but you can still see the makings of a left shoulder. And if you looked at that on the daily time frame, there'd be a much more of a shoulder. Then you got the head, and then you got the extended right shoulder. Once we broke out, we came back and retested it one more time. So once again, the same pattern. You break out from a previous trend line, retest it as support, and then off you go. And this pattern would have suggested a move to the upside of another 250%. And look what happened here. From the neckline, 250% would have given you $26.54. And where did we end up? We ended up around about 1180, far greater than the pattern would have suggested. So according to the historical perspective, the measure from here to the neckline should really be playing out much greater than this would suggest, which is about 350%. Now, nobody can definitively say it's going to do that. I can only point out what's happened in the past, and if it was to repeat, then this is going to go much further than that. But if it didn't repeat, and it only went up to the 350%, then as I've done the measure for you, that this should go up to about 350,000. But when we look at how this price has developed over the last 2 or 3 years, it doesn't seem very likely that it's going to go up to 350. We know Bitcoin has a habit of throwing curveballs and doing things that we don't expect it to do. So everybody can interpret that in your own unique way. And it's interesting that if you look at the current pattern on a shorter term time frame here, if we look closely, and I brought this to your attention a few weeks ago when we were getting the price coming up to the 112, on the shorter term time frame, we're also getting this inverse head and shoulders pattern developing. And now we're coming right up to that neckline one more time. So once we break out of this, then if you do the measure from the bottom to the neckline, that should be a quick 48%. So maybe that is all we're going to get. So all we have to do is keep an open, fluid and flexible approach to the whole thing and let Bitcoin do its own thing and not get fixated to any particular price. So if we were to go up by about 50% from the break of the neckline, so that would take it to around about the 170,000. And I think in a few other measures that we've done, the price goes up to about 180,000. So this doesn't seem too unrealistic. So we just need to keep that in mind as well. So on the shorter term inverse head and shoulders, the price is indicating somewhere around the 170, 180 mark. But on the larger term time frame, it's indicating a lot higher than that. And if you've been watching my videos, that on my default chart here, I've got this range anywhere between 150 to 500,000. So the best thing is always to keep an open, fluid and flexible approach to the whole thing, as Bitcoin can do anything and surprise us at any time. But as we've seen, we're now repeating the same pattern for the 4th time in history. And each time previously, it has actually increased by greater than what the measure would have suggested. So let's see what happens this time around, but certainly very interesting development and a pattern that most people haven't identified. And the $1 million question is, will history repeat again? So we will know in the next few months whether that's going to play out or not. Okay, so if we have a rundown on the time frames for Bitcoin to have a look at exactly where we're heading at the moment and what the charts are telling us. And the first thing we need to have a look at here is the monthly candle, which is about to close tonight as we're on 30th of June. And in the last week or so, this wasn't looking very healthy, but now just as the price has gone back up from the 100,000 to now, which is about 107,500, we're getting a much better looking candle and about to close hopefully above the high of the previous candle. So we are getting this continuation for the 3rd month in a row of a higher close, which would suggest a continuation to the upside. So it's only a matter of time before we actually break through the 112,000 neckline and all-time high that we've had. So this would suggest that we are going to be breaking through very shortly. The only danger here is the bearish divergence we've got currently on the monthly time frame, and that is that we are at the moment on a lower high from this point here which was the 109,000. And since then, we have made a higher high on the price, and therefore there's a bearish divergence. So what we really need in the next month or two, but as quickly as we possibly can, is for this to push up very quickly, allowing the RSI to invalidate the previous high, and that would allow the price to move to much higher levels. And for those of you who are wanting to see where the exit indicators are, one of the ones that we're using here at Wisdom Bites is the 8 EMA, which is the 8 exponential moving average on the monthly time frame. If we put that on, and many people ask me why I use the 8 EMA and not the 9 or the 10, that's because I use the Fibonacci sequence, and that is 8 EMA is a Fibonacci number. 9 and 10 are not. And if you've been watching my videos, you'll know that I use the Fibonacci levels to measure a lot of outcomes, and I find the Fibonacci numbers work much more accurately than the non-Fibonacci numbers. But I am aware that many professional traders use 9 and 10, and that's absolutely fine. And all I would say is just use the number that works for you. And for me, I feel more comfortable using the 8. So here it is. It's the 8 EMA, which currently is at around about 93,000. And the reason why I'm talking about this is that in all the previous cycles, the confirming signal that we've ended the bull market and started the bear market in the time band that we're at the moment, i.e. coming to the end phase of the bull market of the 4-year cycle. Once we break below the 8 EMA, that will be confirmation that we've topped out. And obviously this hasn't happened yet, so we've still got the potential to move to much higher levels yet. So this is all well intact, everything's looking bullish, and we can expect, the way things are developing, we can look forward to much higher levels. And moving on to the weekly time frame, once again, very important, we are again on the RSI making a bearish divergence here. So if you take it from this point, on the weekly time frame, we are making a much lower high, whereas on the price, we have made a higher high. Once again, we do need the price to move very quickly to the upside in order to invalidate this bearish divergence on the RSI. And the important moving average on the weekly time frame is this yellow line, which is the 21 simple moving average. And as you can see, once you capture it, we will expect the price to be finding support until we get to the top at the end of the bull market. So keep an eye on this. At the moment, it's at around about the 95,000. So I wouldn't expect now in the next few months for the price to be falling below the 21 simple moving average on the weekly time frame. And as you can see with the 8 EMA, we're just recapturing this last week. So having fallen below it, it's usually a very good sign that when you fall below a particular support line, in this case the 8 EMA, and then you recapture it very, very quickly, that gives you a very strong momentum to the upside. So this is what I would expect in the next few weeks for this to be moving very quickly to the upside. Okay, if we look at the daily time frame through the eyes of the 60-day cycle, very interesting development here. The thing is, we have actually come up to the neckline of this resistance, which has actually made lower highs. So we are getting rejected on lower highs at the moment, which isn't a very bullish sign. And on the lower side, we are getting the lower highs here. So the channel we're in is a downward sloping channel. And some would say that this is the bull flag here, which is a continuation pattern to the upside. So this is what I would be expecting. So once we break above this channel, we should see some quite rapid moves to the upside. However, at the moment, we are coming up to this for the 3rd time. And usually, as we know, it takes about the 4th or the 5th go. So while it can still do this, we may have to have a little pullback before we go back to the upside. And this is where the cycles are quite unique because it adds the element of time into our analysis. No other indicator allows that to happen. So from a time-based point of view, our current 60-day cycle started here on the 5th of June, even though we broke down below that. Now, some would say this is a failed cycle, and that's absolutely fine. It all depends on your interpretation. My interpretation is that we haven't got a failed cycle simply because we didn't close below the start of the cycle. So we're still quite well intact. And this is one of the reasons why we have had a big bounce back to the upside here. And we've also had the confirmation of the continuation of that cycle by going above the previous high, which was here at around about 106,000. So we're still well above the 106,000. So the cycle to me is quite intact. We're also coming to the midpoint of this cycle, which is the white line here. Now, normally we would have expected after the beginning of the cycle for us to have a period of moving into the midpoint before the midpoint decline that you would normally expect. So this is what I was expecting. However, we did get a rejection here at around about the 110,000. So that was a 4-day high on the 60-day cycle. So what we really need to do is that in the second half of the cycle, we need to get above the 112. Then we have a right translated cycle, which means that we can expect much greater figures for the price to get up to here for the Bitcoin price. So this is where we're at the moment. From the start of the cycle, today on the 30th of June, we're on day 25. So we're right in the time band where you would expect some sort of a pullback. And we've already had one pullback here, which was well before the midpoint. But that doesn't mean that we can't get another minor pullback before we have the rest of the second half of the cycle where we can have the retest of the 112. And then once we get above that, then it's really anybody's guess where this is going to end up. And I think I've done a measure for you in the past that with the Fibonacci retracement, we should be expecting anything above the 120,000, between 120 and 130. The end of the current cycle is on the 4th of August. That'll take it to 60 days from the start here to the 4th of August. So that gives you the 60 days and the time band where we expect the price to oscillate. And if we have a look at the liquidation heat map, these are the leverage players and their stop losses. And as we know, the Bitcoin price tries to take out those stop losses. So wherever the lowest point is, and at this point at the moment, it's at 107,000, because the ones that were a little bit lower at 106,000 have been taken out. So the lowest one here is at 107,200, which we've already met, as you can see here, with the price action. One at the higher level is at 109,000. So we can expect for the price to go higher to try and take out those stop losses at 109,000. And then it has a decision to make whether it wants to go much higher. So this is where I would expect the oscillation of the price for Bitcoin over the next 24 to 48 hours between where we are currently at around 107,000 to 109,400. And a quick look at the dollar, which always tells us how much liquidity there will be. And the lower the dollar goes down, the greater the liquidity for the markets. And this is exactly what's happening. The dollar's been falling, and we've been following this for the last few years. And this has really played out very well to all our expectations that we are getting the lower highs and the lower lows along the way here. So I don't see anything but a continuation to the lower side. However, we are coming to a strong support line at current levels. And as you can see quite clearly, we have found a lot of support and resistance at these levels here. So we do expect some consolidation for the dollar around these levels between 95 and 97. But just like what happened here, we do expect the continuation to these levels at around about the 89-90 level. So this is what I would be expecting, some consolidation and then another fall. And that should set up nicely for a big bull market blow off top for Bitcoin and probably the other markets as well. And finally, I'm going to show you the chart looking at the ratio between the Bitcoin miners and the Bitcoin price. So the Bitcoin miners are the companies that are mining the Bitcoin. And as you know, we run a private member section here for the Bitcoin miners. And over the last 2 years, from this point here, around the end of 2024, the Bitcoin miners have definitely underperformed the Bitcoin price. But as the private members know here, those who are watching this will know that we've been looking at this particular chart because we have had a lot of support on this trend line going back to 3 years. And when the price came back to this level here, we had marked this 61.8 level from the previous high, which was here. So the 61.8 from here down to the bottom gave us a target here of around 19.5. And so far, it's just gone above the 20. And we've just had a breakout one more time. As you can see with this weekly Marubozu green solid candle, there's now a breakout. So what this is telling us is that we've had a very strong breakout for the Bitcoin miners in terms of comparison with the Bitcoin price. So our expectation that the miners are going to outperform Bitcoin, so that's been happening since the middle of April. The miners have outperformed Bitcoin by around about 50% so far in the last 2 months or so. And on further examination of this chart, you can see that we've got a trend line at the top, and we're now coming up to the 5th time to this level. So we can see that each time we have bounced from the bottom of the trend line, we've gone to the top of the trend line. So this is what I would be expecting now for the Bitcoin miners to go right to the top of that trend line. And because we're now coming up to that for the 5th time, there is a good probability that we're going to break to the upside. So we can see that there's a real potential for the Bitcoin miners now to do what we have been expecting them to do, and that is to outperform Bitcoin and also possibly the altcoins as well. So this is now setting up for a really good next few months. And the reason why we've been expecting the big moves from the Bitcoin miners, and it's something that we haven't had, as you can see, in the last 2 years, we've just been oscillating in this price range here. And this is a chart for Marathon Digital Holdings. But this is very similar to most of the Bitcoin miners. And so far, they've not been behaving as we would have expected. So this is what happened at the end of the last cycle. As you can see, in the last few months, we had some incredible moves to the upside. But before that incredible move, this is what was happening with the Bitcoin miners. So the market was really setting people up for disappointment, and then it just takes off to the upside. And this may well be what the pattern is here, where people are just expecting some underperformance or consolidation, and then it moves to the upside. So while nobody can guarantee that, if the Bitcoin price goes up, then the Bitcoin miners, surely, which are very strongly related to Bitcoin, especially the Bitcoin miners who are holding a lot of Bitcoin, like Marathon Digital Holdings, they've got about 50,000 Bitcoins. So you would expect with a high probability that their value will obviously go up as the price for Bitcoin goes up. So it really all depends on what happens with Bitcoin. And if Bitcoin goes up by a lot, then these should go up by a lot more as well. And if you want to follow the Bitcoin miners in the private member section, where we do 2 extra videos on top of the ones that we do here on the Mondays, we do another video on the Wednesday and the weekend, as well as we do market updates Monday to Friday. At the end of each trading session, we do this market update. This is the one from last Friday. As you can see, there's quite a lot of information there. And in this market, information is key. And when you're coming to the end of the bull market, the people with the greatest information will be the ones who will be succeeding the most. And the ones with the most information will be the ones who will be having that extra edge compared to those who don't. So it's very important at this stage of the 4-year cycle to be up with events and knowing exactly what's going on, because every decision, every piece of information can be life-changing. And also in the private section, we run a trading portfolio, which we started off with $100,000. And currently from last week, it's gone up to $437,000. And our target is much greater than that. At the moment, our target is at 5 million, which doesn't seem very likely that we're going to hit. But even if we hit 1 million, 2 million or 3 million, that would be a very good conclusion to a portfolio that's only been running 2.5 years. So as part of the trading portfolio for the last 1.5 years, we've been doing ratio trades, which is basically moving from one miner to the other. And we've done around about 40 trades. And the blue numbers here you can see are the profits we've been able to get from those ratio trades. And we've been very successful doing that. And there's quite a few other opportunities that are coming up very shortly in the next few weeks and months. And if that's of interest to you, then below all of my videos, there is a join button. So you can join the private member section there, as well as in the description box, there's a Bitcoin membership link with a red button there. And if you think that all that information with 2 videos a week, as well as the possibility of doing ratio trades, if that's of interest to you, then you can join the growing band of members in the private section. And please remember, you can actually cancel at any time. You're not tied into any contracts or anything. So many people join for a month just to have a look, to see if that's of interest to them. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.